Okay, straight away we are live now. So we had an interruption, sorry about that. And let's see what's going on with CEI is up 4.09%. It has lost some value. Okay, it's getting now. It's getting some value now, 4.68%. So let's look at the 1 minute live session. It's trading at 1.78 right now. So before that interruption, we were also looking at some of its some of its Greeks, the Greeks on its options. So we can see this is the October 15 series. This will expire in 4 days. So we have here this $2 strike is quite critical at the moment. The calls, the open interest for that $2 strike, the open interest is that the open interest for this $2 strike is 50,212. On the call side. On the put side, it is 28,511, and we have the delta on the put side. It is 0.470. What this it simply means is that as it is now, if the people who hold those who hold those open interests want to hedge their position, if it's going to be a gamma hedge, which is the most important. It's the reason why the gamma hedge is important is amongst other things is because it tends to be a continuous affair, continuous activity. So as this figure continues to adjust and move towards 1, then the folks who are in the stock the people who hold open interests will continue to adjust. So as it is now, they will it will be 0.47. They will what were you talking about here? Let's see. It will be 28,000. We have 28,511 times 100. 100 is because one contract has 100 shares times 0.47. So that is what are we talking about here? 1.34 million shares. That's the number of shares that would be purchased. This is for just to ensure that is as it is now based on this delta, and if this price moves again, they will also do the same thing. So assuming it moves to a higher figure, then they will do that again. But ultimately, that amongst other things, that is why we have seen the stock go volatile and all that stuff. So we'll continue to observe and see what's going to happen. The market hasn't opened yet, so that's why the figure is quite static at the moment. So let's see. It's up from 4.09, has lost some value. Okay, thank you very much for for joining us. If you have any stock you want us to have a look at, just leave it in the comment box. We'll have a look at it. So the next stock is Ptgx, protagonist therapeutics, up 92.65%. Is it optionable? Let's have a look and see whether it's optionable. Ptgx. Okay, we're waiting and waiting. While we wait for that, let's see what's going on here. Okay, so the momentum has dropped a bit, has waned somewhat, and the RSI is also cooling off as well. So the stock itself is mixing it up with the 10-day moving average. It's mixing it up with the 10-day moving average, and it's leave the pattern from deviated now and moving slightly upwards. What else do we have? We have volume so far. Let's see whether we can get this volume of about 533,147. Okay, so you can see that this is live. You can see the volume there. Okay, there must be some news out there. I'm sure there is. There's something concerning the FDA. Yes. So who knows? But there's no guarantee this stock will continue to extend in the main session. That's the problem, sometimes, So let's quickly have a look at Flxn. Yes, thank you very much for joining us. We are looking at a couple of stocks: CEI, Ptgx, Flxn, Sofi, and indeed SDC, PROG, Ater, Clov, Bbig. Right now we're looking at Flxn Therapeutics, Flxn. It is up 72.66% in this pre-market session. Momentum has cooled off a bit. Yes, it has cooled off a bit, but it's beginning to extend again. So the momentum has, based on what we're looking at right now, the first line of this 14-period slow stochastic oscillator has now it's extending seriously, but it's now above 70 right now, above 75 right now. It's above 75, and the RSI is also looking up as well. Currently, just slightly below 70. That's good. It's good. At least it's not indicating that it's overbought at the moment, even though the 14-period slow stochastic oscillator is indicating that the stock is overbought. So in the interim, yes, I think the momentum is indicating, yes, that it is overbought. But indeed, whenever you have an overbought situation, you're going to have a reverse as well in that direction as well. There must be some news concerning the stock, but we don't exactly know. Let's see what's going on with the options we're trying to pull up. We don't have anything there. Let's see. We'll try Flxn. It's important to look at the options because it will give us a guide as to the sort of things that might happen. Ptgx. Okay, so if you don't mind, let's have a look at this at Ptgx. It has options. It's optionable. So let's get all of it out. So we have open interest. They're not so wonderful, but when the market resumes, they may change. And because the options involved, it might complicate the whole price action. The stock may remain in your radar for some time because there are a lot of stocks, a lot of jostling, and a lot of gamma hedging. As far as the stock is optionable, it will definitely continue to involve some sort of delta and gamma hedging, and it will just make the stock remain relevant for some time, much more active for some time. There's no guarantee that would all absolutely be the case, but just look at things. It's a complication. There are two sides of it all. The option side and the stock side. If it were just the stock that has no options, then it would just strictly be on the stock side, and when things fizzle, then market participants will go elsewhere. But with a stock that is optionable, even if the folks on the stock side are getting tired, they may get rejuvenated by the activity from the option side. So obviously the folks who are trying to gamma hedge, continue to move, continue to adjust. If the delta moves, they continue to do so. There's no guarantee that will always be the case, but it's amongst other things. That's the sort of thing that does to some extent contribute to the sort of things we're seeing with CEI, amongst other things. That's why the stock has remained relevant, right now for some time, and it's still relevant. We're getting, probably we have approached 2 weeks now since it has been the most active, but right now we are just looking at Ptgx. We can see for this October 15 series, the most popular of them all is the 1750, and the stock has exceeded that. Now it's now at 1824. So the stock indeed has since been in the money. Yes, it has since been in the money, and or rather, okay, it has been always. No, sorry, this 1750 has not always been in the money. It's just probably got into the money now because of the price action we are looking at right now. So it's the most popular is that 1750. You can see the open interest there, 1,564. Not a lot, but when the market opens, it could be different. So let's see if we can refresh and get see whether things are moving already. Okay, we're not getting any action there, so let's move on to Flxn and see if it has options. Flxn Therapeutics. Okay, yes, it's optionable as well. So we have the most popular is the 750. So these are not as active as CEI. So let's look at what's going on with Flxn right now. Up 73.01%. It has reached $10 right now. So let's quickly see what's going on with SOFI. Yeah, we have 3 likes. Thank you very much for liking this video. So Sofi Technologies up 4.19% in this pre-market session. So not very much, is not as active as the other ones. So let's quickly look at CEI, and okay, it's up 4.68. So let's look at SDC. Smile Direct down 0.45% in this pre-market session, but the RSI, sorry, the 14-period stochastic oscillator is indicating that the stock is overbought right now in this pre-market session, and the RSI is also indicating that as well. So there's a good chance based on that, because normally when the stock is overbought, the natural next step will be for the stock to retrace, to cool off. It's not a guarantee that it will always follow immediately. It may remain sustained, but right now it is overbought right now based on what we're looking at right now in this pre-market session. Okay, you can see now the RSI has cooled off now, so that's some good news. And also the 14-period slow, the first line of that 14-period slow stochastic oscillator is also indicating that it's cooling off a bit. Hence that you can see the retracement is increasing. It's now 0.76 SDC. Let's see what's going on with the options for SDC, if it's optionable. SDC, Smile Direct, yes, SDC is optionable. Okay, yes, it has a healthy number of contracts here. You can see the most popular is the $7 strike. Yes, for this October 15 series, is it the October 15 series? Yes, the $7 strike. So on the put side, we have I think the most popular is this $6 strike. So this is quite important, because if these folks are going to be gamma hedging, then we'll be talking about this figure times the delta. So let's quickly see what the delta is saying for them. So that 18, so $6 strike, the delta is 0.52. okay, still okay, still not so high at the moment, not so high. And then the delta on this $7 is 0.409. So let's return and so it's important that we observe what's going on with them, because obviously this the reason why, amongst other things, the SDC has remained relevant for some now. It's it's in the news, or it's been buzzing, is amongst other things. It is the interest that all market participants have, and what is also feeding that interest is because it's also optionable as well, the short interests. So let's quickly have a look and see what the short interest is for SDC. Okay, short interest is 32.83%. You can see that it's going to take 2.6 days to cover all of those. So normally you would, according to some by certain estimates, this is not so wonderful. 2.6, which will be 2.2 days and some fraction, roughly 3 days to cover this. What is called shares, 34.25 million shares sold short. It will take about roughly 3 days to cover all of them. So you can see why, amongst other things as well, it is this figure 32.83% that is attracting market participants. So it is very important to watch this gamma, the options, the Greeks on SDC. So the market hasn't opened yet, but it's key to just have that in mind. From time to time, if you have the ability, just keep on refreshing and see what's going on. If the stock continues to rally, then there's a good chance that the hedgings that will be occurring will ensure that maybe it may continue to also rally or not, as the case may be. It's sometimes it's touch and go. Sometimes things will all the activities of the folks on the stock side and on the activities of market participants on the option side, they may converge and lead to an explosion. So, but amongst other things, the reason why the stock is still relevant right now, we all still talking about it, is the short interests, the low float, relatively low floats, the optional, or the options involved, and all that stuff. So the stock will continue to remain relevant for some time. So that's what we're dealing with right now. So let's quickly see what's going on with the stock at the moment. Okay, still the loss is still 0.76%. So let's quickly look at the PROG. Yes, we have 4 likes. Sorry, we have 4 persons there. Thank you very much. Leave your thumbs up. PROG is up 2.22% in this pre-market session. Let's see what's going on, whether it's optionable as well. If you have any stock you want us to have a look at, just leave it in the comments and let's see. Okay, PROG is optionable, yes. So let's get all the strikes. Okay, so it's also relevant as well. You can see 26,000 the 150. Okay, the $2 strike seems to be the most popular, and followed by, for some reason, the $5 strike on the call side of things. These will expire in 4 days time, but it's also important to look at the November 19th that will expire in 40 days, but still longer, still far off. So I think the most popular is this $2 strike. So here on the put side, there isn't very much. So obviously we can see that there is a lot of by far on PROG that the put call ratio is very small. By that we mean the open interests. You can see them, they are very scanty here. You can see that the most you have is this $1 strike, 7,684. You can see what's going on here. You can see when you put if you sum up the open interest here, and you put it on top of the sum of the open interest on the call side, you can see that the put call ratio is a very small one, so it's just an indication that market participants are heavy on the call side. They're expecting amongst other things, they're expecting the stock to continue to be active, or at the same time as well, the short sellers are hedging with they're doing gamma hedgings. So let's quickly have a look at the Greeks for PROG, and we see the sort of figures we are looking at here. So we can see I think the most popular one, sorry, if you don't mind, let's have a look again and get the most popular of those. You can see the most popular is that $2 strike, but indeed from $1 all the way down to $1 to $1, $1.50, $2. Okay, let me put it down. $1.50, $2, and then the $5. We'll have a look and see what their deltas are saying. So let's quickly dive down to the Greeks again. So we have the $1. The delta is 0.883. Okay, so, and we know that the open interest there is about 31,000. So if it continues to extend, if the stock continues to extend, even as it is now in the pre-market, I think the options are equally trading. So things will begin to get active there. Things begin to boil up. So obviously with that, this delta tells you the sort of figures. This will be, if you multiply this by 100, this delta figure by 100, you will have 188.3. So if you add that, if you multiply this 88.3 by the open interest, it will give you an idea of the volume of stocks that might be involved in a gamma hedge. But it doesn't absolutely mean, because we don't have all the figures, the fact that we have this open interest, it may just be the figures, the positions of just regular folk. But there's no doubt about that. It's not just the positions of regular folks. It will be definitely the majority of the open interest there is usually the positions of market makers. So it helps to give you an idea of what we're looking at here. 88.3 times the open interest, that will give you a sort of volumes we are looking at right now. So the $5 is the delta. Okay, the delta is still very small. It's still very small. So here it wouldn't be that much. We are talking about only 7.4 times the open interest. So with this sort of levels, they wouldn't be panicking that much. So, but up here as well, the panic will up here on the $1 strike. Things will yes, they'll be watching it, and then on the 150 as well, they will also be watching as well. And obviously the stock has now it's ancient, goes not far away from $1.5. So that's just a rough idea of what can possibly happen with PROG stock. So let's quickly have a look at Ater, another popular stock. up 1.55%, and I believe easily it's optionable as well. Yes, thank you very much. If you just joined us, we are looking at a couple of stocks, and we are also checking their options and their Greeks. So we're looking at Ater now, ATER. Let's see what's going on. It's up 1.55%. ATER. Let's get the whole all the 20 strikes. So we have the $10 strike is okay, not the most popular. The $10 strike for the call on the call side, you know. I think the most popular is the $15 strike. It has a 21,688, and also down here we also have the open interest on the $35 strike is also increasing. So on the put side, we have the most popular is the 750 open interest of 10,731. So that gives you an indication, but easily I think the put call ratio for this October 15 series is relatively small. You can see we have open interests, we have more figures here. You can see that than here easily. You can easily see that. So let's see the most popular that is closest to the money is the $15. It has 21,688. So let's see quickly what the Greeks are saying there for ATER. So let's look at the Greeks for ATER. So I think this is the $15. Okay, so the delta is still at 0.06. So if you multiply this by 100, it will just give you 6.6. Nothing to panic that much. And then the $10, the delta is 0.23, so that will be 23. That is 23.6 multiplied by the open interests. And then we have on this side, the put side, we have a delta of 0.399. So this is quite growing. So yes, it's an indication. You can see, I think there might be something. Maybe we have a slight amount of hedging that may have gone through, or because we can see a figure of 0.39 and roughly 0.4 there. It just tells you something. It just tells you this. Maybe they are on the lookout to ensure that their hedgings will be in place to ensure that any possible spike in the price will not burn them out. So yes, it's quite critical. You know, it's quite critical. This 0.399 there we have for the delta of the 750 strike of this October 15 series. So indeed also we have 0.601 for the 750 as well. So, and the stock itself is trading at 7. What was the price? 7.83 at the moment. So but the market hasn't opened yet, so but it's just we're just looking at what the market makers are equally looking at, you know, to cover to hedge their positions, and what ultimately also feels what's going on with ATER stock. And these are the sort of things that has kept the stock relevant. So let's look at the short interests for ATER. Okay, so it's 29.75%. It would take 0.4 days. Not so wonderful. The short interest ratio is not so wonderful. Not up to a day. But the percent floated is at 29.75. So it's still something as well. You know, it increased by 13% of late. So it has a relatively small float of 25.28 million shares. So yes, ATER is yes, it's quite relevant because the whole the whole security, the whole is all complicated. You know, they have options, things brewing up there, and they're flowing into the stock itself, and also market participants have been reading about it on social media, on Reddit. So it will, some of these stocks we're looking at right now, they will continue to remain relevant because, you know, like I said, I think the best word for them is it's a complication. You know, market makers are adjusting and gamma hedging, and you are equally watching and also placing your bets, and it keeps on feeding on itself, going round and round and round. That's why they will continue to remain relevant, but just be careful. Nobody knows when it will die down. You know, nobody knows. So we'll do our best to continue to update you. So let's look at Clov, CLOV, Clover Health. Clover Health is up 1.02% in this pre-market session. So I think the 14 period slow stochastic oscillator is indicating that the stock is currently overbought at the moment. And then but the RSI is not indicating that. So let's see what's going on with Clov on its options. On its options. Okay, let's get the short interests. Okay, we don't have the figures there. Okay, short interest is about 31,020,000. Okay, that's what is sold short. So let's see the options for Clover. If you have any stock you want us to have a look at, just leave it there. Let's look at them. Clov, CLOV. Let's get all the strikes. Has 32 strikes. Okay, easily we can see that let's see. The most popular right now is this $8 strike on the calls, and then the most popular as well on the put side is the same $8 strike as well. So let's have a look at the open interest. You can see that's the open interest at yes, the open interest is 22,325 on the call side. On the put side, it's 9,872. So yes, there's and also the next one there, the 850 is also quite heavy, 11,761. $9 is 12,330, but not so wonderful, not so huge for the 950. But then the next we have the $10 strikes is 16,913. So easily the put call ratio is quite small, indicating that yes, market participants are leaning on the call side. Maybe they're probably using the calls to hedge. You know, it's a call hedge, or amongst other things as well. Market participants are buying the calls to take advantage of a potential move in the stock. So that is what we're looking at right now. So let's see if we can have a look at the delta, or sorry, the Greeks on that. It's from $8, I think, from $8. Yes, let's have a look at the Greeks. Yes, if you just joined us, thank you very much. Subscribe, like, share. Let's get going. Okay, from $8 you can see the delta is 0.471. You know, if this figure begins to increase, then you'll be multiplying that with the 22,000, and it will give you a figure that market makers may be buying or selling, as the case may be, to hedge their positions in to hedge their portfolio. You know, so on the put side we have a delta of 0.53. That's quite significant. these figures, they always change. They are constantly changing, and when they change, market makers may be forced to react to them, and that's obviously a gamma hedge. That's why it's important, because that's constant hedging. It's the amongst some of the things that have kept some of these stocks relevant. Clover has been relevant for some time, even though of late has died down a bit, but it's trending right now. So we can see the next one is the 850. It has a delta of 0.32. Okay, and the next one is the $9. It has a delta of 0.22. Then the next, we know that this $10 strike, it's quite popular, even though the 950 wasn't. So it has a delta of 0.123. So indeed, those open interests may not just be the open interest of market makers. It will definitely include the open interest of regular market participants. So let's see what's going on with Clov. It's up 0.89%. So let's return and see what's going on with CEI. It has lost all of its value now, down 0.5. Okay, at some point it was up 5% and some fraction. Now only 0.58. Something must have happened. Something must have happened. So the market is opening in about 18 minutes and some fraction. So let's look at Ptgx. Protagonist Therapeutics up 89.1, 89.87%. I think some point it was up 92%. So let's see if we can find any news concerning Protagonist Therapeutics. Yes, if you just joined us, thank you very much. Give us a thumbs up if you can, and let's get going. Protagonist Therapeutics shares soar after FDA lifts a clinical hold on its experimental cancer drug. Yes, that's what's behind it. It's experimental it's experimental blood cancer treatment has been lifted. The hold on it by the FDA has been lifted. The hold was put in place over concerns of skin tumors from animal research and deeper examination of 4 new cancer cases that emerged during a clinical trial. No safety concerns were identified during the hold. The investigational treatment is expected to move forward into phase 3 clinical trial for polycythemia vera in the first quarter of next year. SVB Leerink analyst John Schwartz told investors that lifting the clinical hold is a very welcome surprise, given the hold was disclosed less than a month ago and it wasn't clear how long it will last. So yeah, that's what's going on with PTRG. But there's no guarantee the stock will continue to extend in this session. This session that will resume very soon. There's no guarantee that will happen. It's okay. I was losing some value now. Okay, the stock is currently oversold. So based on the 14-period slow stochastic oscillator, is at 11.91. Yes, so the stock is oversold at the moment. So there's a potential that it will extend again, going by what we're looking at right now, going by what the momentum oscillators are indicating. But RSI is not indicating it's oversold. It's just resting at 29.88. So anything below that will be indicating that maybe it's oversold. So all in all, we can still say it's being oversold at the moment. So we can see the stock has now retraced below its volume weighted average price at the moment. So yes, it leaves some potential for the stock to move up an inch, move up slightly again. So yeah, that's if you like some positive, it has retraced a bit, maybe there's a chance it will move up again, but there's no guarantee. There's every chance it will continue to drop down, so even at that, there's also no chance, there's no guarantee that it will even do better than it has done right now when the market opens. So let's quickly look at Flxn. Flxn is up 72.49%. So okay, the stock is currently overbought based on the 14-period slow stochastic oscillator, and but the RSI is indicating it's just improving. It's still holding up, but not overbought. Not overbought. So it's a mix of things there from the RSI and the 14-period slow stochastic oscillator, and the first line of that oscillator is above the slow lines. So that's it's since crossed, and obviously yes, that will be expected since the stock is up 72.15%. And the two of them, these two stocks, Ptgx and Flxn, they are both optionable, but not they're not as active as CEI, SDC, PROG, Ater. They're not as, the interest in their options are not as much. So there's every chance they will just be one session wonders for now. So just be careful with them and know how you're going to play them. SOFI is the next one. Yes, thank you very much if you just join us. Like, share and subscribe. Thank you. Yeah, we have 3 likes. If you don't mind, can we get one more like? Let's get going. If you have any stock you want us to have a look at, just leave it in the comment box and we'll just quickly have a look at them. So SOFI is up 4.2%. You can see the stock is extending, started to extend further again. The first line of this 14-period slow stochastic oscillator is ahead of all the other ones, and is in the overbought territory. The moment the RSI is also just looking up, but not as overbought as the RSI. So that's is it optionable? Sofi Technologies. Yes, it's optionable, and we have the most popular is the 1750, followed by the $220 strike for this October 15 series. 1750. So where's the stock trading at right now? It's trading at 1690. So they are probably expecting the stock to extend to that sort of figures, 1750 or thereabout. So but we have a huge interest there. And for the on the put side, we have 20,000 open interest on the $15 strike. So this 1750 has the most on the put side, on the call side. So let's see what the Greeks are saying for that 1750. Let's see what the delta is saying there. $17.50. The delta is 0.189. Okay, not so risky, not so high. So if you multiply this by 100, you'll get 1890. Then if you multiply this 18.9, let's get the full chain. 18.9 times 39,312. So let's multiply that. and to give us a fair idea of the number of shares they may have to buy to hedge or sell, as the case may be. 39,312 times 18.9. Okay, it's not a lot of shares. 742,996. So, but if it continues to rally, then that may be the case. This figure may continue to increase. Right now, if it's if the short sellers are trying to hedge, so and they have picked up positions here to cover their positions, then they may probably begin to buy this, or they have to do a gamma hedge. Then they probably have to jostle and maybe buy maybe that 742,000 shares, as the case may be. So it just gives you an idea of the sort of shares that may be involved. 742,000 or roughly 743,000. They may either be sold or bought, as the case may be. But all of these hedgings, they spill into the market because when they're hedging it, they're looking at what's going on with the delta, and then they are calculating the number of shares they either have to sell or buy. And obviously when they're buying, it's affecting the price of the stock, and you are watching it as well, and you are moving to either take off money or take it up, or take up positions. So let's see what's going on with CEI. It's losing some value. So let's see CEI, Combat Energy. So maybe it's up 6.43% now. So getting busy again. You can see inch top has deviated from all of those moving averages. They were all bunched up. They have been bunched up for the best part of this pre-market session. It's now inched away, but is pulling back. You can see now the value is now 4.97%. So it's quite active right now. So the market is open in about 7 minutes or thereabouts. So we're not seeing any values. The figures are about 4 point. It's really active right now. So is there any chance it will rally in this session? We don't know. We don't exactly know. So it's trading at $1.8 right now, a gain of $0.9. So let's return and see the sort of figures we are dealing with as it concerns its Greeks. Yes, if you just joined us, thank you very much. Like, share and subscribe. Thank you very much. So we can see easily for this October 15 series, the put call ratio, that is the open interest figures, and the open interest figures on the put side over the open interest figures on the call side. You can easily see that these folks, the open interest will be less than 1 for sure. Sorry, the put call ratio will definitely be less than 1. You can see the open interest on the call sides are in the tens of thousands, and we only have 2 strikes that is in the tens of thousands. That's the $1 strike and the $2 strike. So that $1 open interests on the put side is 37,570. So it's an indication that market makers and market participants are speculating that yes, it could depreciate, it could fall in value, and if it's not going against them, then they may begin to hedge. So let's quickly have a look at the Greeks we are looking at here concerning these. So obviously the most popular is this $2 strike, 50,213. So let's look at the Greeks. So we have a delta of 0.525, so that's increasing. I believe we looked at it earlier on today. I think it was about 0.47. So Yes, it's balling up a bit, as I believe. But okay, on this put side, the delta is 0.11, so it's not the danger is not there that much. So this is the one that is, this is what we are looking at here, this delta. So it will be 0.52. So if you multiply this 0.525 by 100, you will get 52. So 52.5 times 50,000. So that will give you an idea of the sort of